if you're running a gold mining company, you're happy these days with prices at or near a record high. Let's focus now on K92 Mining. It's one of the few publicly traded companies operating exclusively in Papua New Guinea. And the company delivered a beat on its revenue and earnings in the latest quarter. Let's bring in, once again, John Lewins, CEO of K92 Mining. John, thanks very much indeed. Just looking at your all-in sustaining costs, you're pretty low, not much more than $1,000 an ounce all in the latest quarter.
Yeah, afternoon or morning, depending where you are in the world, Andrew. Yes, look, our all-in sustaining costs, as you said, just over $1,000 an ounce, and they are elevated because we're busy with our Stage 3 expansion. So, although they're very good, the cash costs also very good at just over 600. In fact, we expect them to go lower with the commissioning of our Stage 3 expansion.
So you must be just wallowing in cash. You must be tripping over cash when you come into the office, John, these days, with gold prices at around $3,300 right now.
Yes, that would be fair to say. I think we finished the quarter with a record cash balance of 180 million, and that was included in that was that we paid out another $11 million in corporate tax to PNG government, which made for over 40 million in corporate tax paid last year, while we were spending 150 million in capital.
So what will you do? I mean, will you pay a special dividend like Lundin Gold, or what is your plan here?
Well, we're still busy with the Stage 3 expansion. We've got another 200 million to spend this year. So we've got a good cash balance. We're fully funded, therefore, with the expansion. We don't really see ourselves paying a dividend until at least next year, as all of our money right now is going into that expansion and of course, a large exploration program. And just a reminder, we're looking at where your mine is. Of course, Grasberg is on the Indonesian side of the border on that giant island. But there's so many big mines, Ok Tedi, Porgera. You're not the same kind of scale, though, as those mines I mentioned, I don't think. So Stage 3 expansion takes us to a bit over 300,000 ounces a year. That's a brand new plant that we're putting in, obviously major expansion underground. From there, we go straight into our Stage 4, which will take us to over 400,000 ounces a year. If you take Porgera, I think their plan is to get ramp up to about 500,000. So we're a little bit less than Porgera, but of course our costs will be something like half of theirs.
And how come your costs are low? I know you've got grade, that's a thing of beauty, north of 14 grams a ton, I believe.
Last quarter was exceptionally good. It was over 14 grams per ton. Average long term is more like 8 grams per ton. That's still high grade, as you know. We have an underground mine, but it's an underground mine in a mountain, so you go up into it. So gravity helps you with the mining. So your costs are actually very low, even though it's an underground mine, and we get extremely high recoveries, over 95% gold and copper. So they all combine to give us a very, very low cost base.
And give us an idea. I mean, when we see gold prices, we saw them a few days ago get to a record high north of 3,500. How do you sell your gold? Do you sell it into the spot market? And do you do it on a weekly basis? Just give us an idea of the mechanics, if you would, John.
Okay, so we produce two products. We produce a copper gold concentrate, which gets shipped out, and we produce doré. Most of our gold and all of our copper is in the flotation concentrate, and about 10 to 15% is in the doré. Doré is generally shipped out once a month, and we're paid spot price for that on the day that we ship it.
That's
the concentrate.
Sorry, go ahead. Go ahead.
And for the concentrate, we get paid the majority of it when we actually put it on the ship, and the balance on the out term. Again, we go with spot price, but we do have in place until the end of the year what's called a put, and our put is at $3,000 an ounce. So basically,
no matter if the price drops below $3,000, we get $3,000. If it's above $3,000, we get whatever is above $3,000. It's an insurance.
And of course, doré, a term for rough or unrefined gold produced in your metallurgical plant. And I mean, your doré, does it have a bunch of copper in it or a bunch of silver in it, or is it pretty well all gold?
It would. Our doré runs at about 85% gold, with the balance being silver.
Okay. And one thing I wanted to ask you as well, what kind of elevation are you at in Papua New Guinea? Because I'm guessing water is not a problem. It's you got some pretty good rainfall in that part of the world.
We've got 2 to 2.5 meters of rainfall, which is actually low for Papua New Guinea. If you go up to Oktedi, they're more like 8 to 10 meters of rain. Wow. So we're in relatively low rainfall area, but you're quite right. Water is not an issue for us. It's not an issue underground either, because again, although we're a wet mine, gravity brings it out for us. And elevation-wise, our plant sits at about 550 meters above sea level. The portal into the mine is at about 800 meters above sea level. And the top of the deposit, which is the top of the mountain, is about 1,900 meters above sea level. So we've got about 1,000 meters so far depth of ore body, and it's still open at depth.
And finally, I understand that about 94% of your employees are Papua New Guinea nationals. Are you a big chunk of the economy in PNG?
We're significant. Overall, the mining or the resource industry is about 34%, and about almost 90% of the exports come from the resource sector.
John, we better leave it there. Great hearing from you as ever.
Thanks very much, Andrew. Nice talking to you.
John Lewins, CEO of K92 Mining.